Good evening, everyone, and welcome to the 6th Great Britain-Cyprus Business Association webinar. My name is Xenia Neophytou, and I'm the Managing Director at CX Financia. I will be your hostess for the day. Before I begin, let me start by saying a big thank you to the sponsors, AstroBank, Elias, Neocleous & Co., Exsus Group, Delfi Partners & Co., Adler Shine, CX Financia, and our speakers for making this happen. Also, a big thank you for all of our attendees for joining here today. Please let me remind you that we have a Q&A section where you can type your question before clicking submit. Our speakers will try to answer them all at the end of the webinar when we conclude with the speaker presentations. The speaker presentations are available on demand. Please send us an email and we will arrange to send them to you. We will be recording this webinar. We will have the video recording available within the next few days on the Great Britain-Cyprus Association website for those interested. Today's webinar aims to highlight the business links and opportunities that remain and have arisen following the exit of the UK from the European Union and is titled Cyprus and the United Kingdom, the Promising Lands. Surely you too have questions and assumptions regarding the implications of Brexit and if opportunities surface from it. Our speakers today will give you many interesting insights on Brexit impact on the industry we'll be discussing about, but also share with us other useful tips in taxation, banking, real estate, and financial services industry. Hopefully, by the end of the webinar, our attendees will gain a lot of insights for individual and business interactions between Cyprus and UK and decide whether Cyprus and the United Kingdom are the promising lands. I will now invite Mr. Savvas Kyriakides, the founder of Great Britain-Cyprus Association, to say a few words. Savvas, the stage is yours.
Thank you, Xenia. I would like to thank first the Minister, Mrs. Natasa Pilides, for being with us today. I also would like to thank all the speakers, Dr. George Mountis, Andrea Parparino, Michalis Michail, Nick Shah, and Alex Kyriakides, and also Stella Zenios, and the moderator, Xenia Neophytou. It is our pleasure to have all the attendees with us today. As an association, we are aiming to provide networking between Great Britain and Cyprus. And during this pandemic, the webinars are helping us a lot to reach our target. We are aiming probably by the end of the year or early next year to organize live events as we used to organize in the past. Mrs. Pilides was present and speaker in the 2017 event in London, and she is aware of this. And so to Alex Kyriakides and many of our attendees and other business involved as members in our association. Finally, I would like to thank our sponsors, Delfi and Partners, AstroBank, Elias, Neocleous & Co., Adler Shine, CX Financial, and Exsus Group, because we are able to provide this opportunity to you through our webinars, through their sponsorships. Thank you very much, and I hope you will enjoy our webinar.
Thank you so much, Savvas, for the introduction. To kick us off for the day, our first speaker needs no introduction. She's the Minister of Energy, Commerce and Industry of the Republic of Cyprus since July 2020. As she pointed out when assuming her duties, the challenges of the ministry are many and the goals are multidimensional, from hydrocarbons and energy to trade, industry, and the registrar of companies. She's committed and works hard to continue the ministry's successful course. Her vision is to establish Cyprus on the Mediterranean's energy map and work for the importance of environmental issues. Natasa previously served as the Shipping Deputy Minister to the President and the Director General of Cyprus Investment Promotion Agency, and her work experience includes more than 15 years in the private sector. Natasa graduated from Oxford University with a first-class honours degree with distinction in modern languages and literature, and she's a fellow of the Institute of the Chartered Accountants of England and Wales, and a member of the Certified Public Accountants of Cyprus. Let's welcome our keynote speaker, Mrs. Natasa Pilides.
Welcome.
Thank you very much, Mrs. Neophytou. Thank you also, Savvas, for the introduction. Indeed, I remember being at, I believe it was your first event in 2017, together with Commissioner Mr. Fotis Fodiou and many distinguished speakers from the private sector at the time. It was, of course, a time before COVID when we could all meet without the restrictions that we have now. And I really hope that the next seminar that we that you organize will be a physical one where we're all finally able to meet. In any case, it's lovely to be back even virtually and to have the opportunity to see everyone, including a lot of very distinguished collaborators on the panel, on today's panel. So thank you everyone for the collaboration, and thank you Savvas for the invitation. If you will allow me to share my screen, I'll try to talk a little bit about what the ministry has been doing and what we plan to do in using a few slides just to help with the numbers. I'll try not to go on for too long, just to spare you of the minute details. But as Ministry of Commerce, Industry and Energy, I think we have a very diverse portfolio, but it's also a portfolio that has very distinct linkages between each topic. And I think the way the global economy is moving towards greener practices, we really have an opportunity to bring everything together under the umbrella of green growth. So the sectors of the Cyprus economy are, I believe, well known by most. We are primarily a service-based economy, but we still have an industry which represents about 8% of GDP. So one of the things that we're trying to do is really link up industry with services and create a more knowledge-based economy in which business friendliness is obviously enhanced, but we're also trying to do that whilst giving companies, entrepreneurs and individuals incentives to turn to a more green and circular way of working. So so that is the aim. Now, with regards to the UK and Cyprus relations, Xenia mentioned that both are promising, hopefully, countries, but the relationship between them is also very promising and has been very promising for Cyprus for decades. We have a very good record in bilateral trade, with a lot of our exports actually having Britain as the top destination. So this is something that we want to preserve even with in the post-Brexit era, and with other different things happening, such as our Halloumi PDO, for example, approval. So we're working hard to develop a trade strategy that is appropriate for the times that we're going through, and to continue having the increase in trading that we've had in previous years. Just to sort of mention a few years, we've had an increase of 35% between 2015 and 2020 in goods specifically, not services. You can see there in the third bullet point, the main export products, of course, Halloumi being by far the first one. In terms of services, we also have quite a good record with the UK. We've had 70% increase between 2011 and 2019, and quite a large number of exports for Cyprus standards, 13 billion in 2019. Now, with regards Brexit, of course, there are a lot of question marks, particularly with regards to financial services. Obviously, you can see there some of the services where we've had a lot of give and take. Fund management is one emerging sector. Forex capital is very, very popular in Cyprus and has a sort of upcoming trend in the last years in Cyprus. How is all of this affected by the EU and the UK trade agreement? There is a lot still that remains to be clarified. However, we are definitely very much in a fortunate position where we have an agreement and we know much more than we did before it came into effect. Fortunately, we do not have any dues which make our exports less competitive, so that's a big plus of the agreement. Now, in terms of financial services and other provisions of services, there are a few issues that remain to be clarified, but we're confident that Cyprus and the UK will continue the very close collaboration for, of course, our mutual benefit, the benefit of both countries. Now, as a Ministry of Trade, we have a lot to do to make sure that we do remain competitive. One exercise that we're doing now is branding. We're working on a made in Cyprus brand for goods and services. It's a complex project because it has to basically encompass pretty much the main products and services that we want to give an identity to, and the identity needs to be homogeneous, but setting each service and product apart. So we're working on how to build this brand in the quickest possible time, but with a strong framework that gives people that has, you know, certain accountability and credibility issues that basically make the brand worth having and worth getting by companies. So so that's one of the major projects of our trading services, as well as for our major exports. We're also doing a study on how to give them a bit of a push and how to make ourselves more competitive. So hopefully we'll have the results of that study sometime in the summer, so we look forward to analyzing them. At the same time, we are upgrading our trade centers, so we've done an analysis of which trade centers are still relevant, which are not, and how to proceed with our policy by opening up some new trade centers, perhaps reshuffling or shifting some of the existing ones, and at the same time linking our export help desk with those trade centers in a better way and making the export help desk much more effective in this way. So all of that is stuff that we're working on, and we hope that the results will be visible to the to people, to businesses soon. Another important development which we started back in October is the fast track business activation. We already have one UK company that is a member of fast track, and I think we have interest from a couple more. What fast track does is that with a few simple and easily met criteria, companies which are owned by people from non-EU countries can enter this mechanism, and we basically help them out to set up in time, so to do all the necessary registrations, whether it be company registrations, social insurance, tax, etc., VAT, within 7 working days from getting into the mechanism. But most importantly, we help with the facilitation, we facilitate rather with the issuing of residence and work permits for, in some cases, quite a large number of people. So we've helped some companies with quite large numbers of people, in excess of 100, to move to Cyprus, to relocate, to get their permits within 4 to 6 weeks from their application, which is which is something that has required, of course, the input and very close collaboration with the Ministry of Interior. We've changed some of the migration rules as well, so that they are a lot friendlier when it comes to these companies and people who we believe add value and talent to Cyprus and to what we have to offer in different sectors. Now, of course, Fast Track is also available for companies which are Cypriot or within the EU in certain cases, not for every case, just because we don't have the capacity to deal with, unfortunately, every single company at the moment, but it's something that we're trying to extend to include all companies. At the moment, for European companies, shipping companies, high-tech companies, and pharmaceutical companies are basically eligible for Fast Track as well. This is linked also somewhat to our industrial policy. As I said earlier, we still have about 8% of our GDP based on industry, and we think that industry can benefit a lot from the push towards green growth. We believe that by giving tools to our industry to develop further, it can play a very important role in the post-COVID era and in making Cyprus more innovative and more and generally better performer within the EU and also worldwide. So we have an industrial policy which is going to help us to do that. One of the key challenges is basically motivating young people to choose professions in industry and to get an education that is related to that in order to be able to do that. So a lot to get done, but hopefully we will manage to make a difference. One of our very key aspects of the industrial policy and general entrepreneurship policies is incentive programs, which I will talk about in a little bit, just to link them in with what's happening in the energy sector. Obviously, the Green Deal is hugely important for us, and it sets a whole new level of targets that we need to achieve. But we need to look at these targets as opportunities. I think by creating a circular economy where businesses are sustainable, they become a lot more attractive to international clients, to the global market. And so there's a lot that we need to do to make Cyprus more competitive in this regard. One of the things that we're working on is the liberalization of the electricity market, also storage systems for energy, large-scale storage systems, which will allow us to increase our renewable energy mix, our renewable energy in our energy mix much more. And also, of course, the optimum utilization of hydrocarbons of our own resources, basically, both for Cyprus, but also for export to international markets. Now, a few really important projects in terms of transitioning to green energy are basically, if I skip, sorry, if I stay on the slide, the liberalization of the electricity market I mentioned before, but also the introduction of natural gas. Introduction of natural gas to Cyprus is going to bring down electricity prices and also our carbon footprint. So that is something that we plan to complete by 2022, which is around the same time as the full liberalization of our electricity market. And that really will, I think, change the energy sector completely here in Cyprus and open up a lot of opportunity. Now, in addition to that, I did mention funding programs earlier funding programs are extremely important in motivating people and giving them the tools, particularly now that, you know, cash flow is an issue with COVID and everything that businesses have been going through for the last year or so. So we have about 400 million worth of funding that we will be providing to companies and households in the next 6 years, 2021 to 2027. We have already, in the last 3 months in 2021, we have introduced funding programs of about 67 million, which are already accessible to people and to businesses, and about 60% of that, so more than 35 million is, or closer to 40 million, is actually purely on green projects. The rest is to do with entrepreneurship, which also includes things like upgrading technology and equipment, but also moving towards a circular economy where we will have other funding programs available as well in the future. So I've put all of these, we've put them in slides, all the various things that are available, but I won't spend the time to go through each of them individually. The important thing is that we will continue to announce these as in very sort of consistent intervals, so that we have always so that we're always giving opportunities to businesses and to households to become greener, but also to have liquidity and to proceed with investments to basically become more competitive. So some of the programs, as I mentioned, have been issued already. Others will go through a consultative process. So if there are any suggestions on things that we should be doing, we're very happy and willing to listen and to take them on board. Just another few funding programs here that you can see that are purely for entrepreneurship as well. As you can see, there's a lot on even development of clusters or manufacturing in different types of activities, including agricultural products, and of course new entrepreneurship as well. So people setting up new businesses, which is something that will be introduced in a few weeks from now. So we're working on that quite intensively at the moment. Just one last point, the RRF, the facility that we have available from the EU to actually kickstart the economy after COVID is very extensive. The 400 million that I mentioned that is going to our ministry is only a small part of what's happening. Of course, within green growth, there are a lot of ministries that will introduce their own funding programs and incentives, such as the Ministry of Transport for electric cars, Ministry of Finance with the green tax reform, and the Ministry of Agriculture with a fair amount actually of incentives for the agricultural and environmental sectors. So together we hope that we will provide the ability for companies to innovate and to modernize and to be attractive in the global arena. And we hope that this will also give all the more incentive for the collaboration between the UK and Cyprus to continue. So that's it from me as an introduction. Of course, very happy to take questions, and thank you very much for the opportunity and for everyone's attention. Thank you.
Thank you very much, Mrs. Pilides, for the wonderful introduction. It was indeed very insightful, sharing with us the important developments of the ministry and the way forward. Indeed, a lot of work has been done in modernizing Cyprus procedures across all industries, and especially towards energy and sustainability. I think due to other obligations, you may not be able to stay until the end of the webinar. So if any questions for Mrs. Pilides, please send it to us and we can forward to her accordingly. Thank you very much, Mrs. Pilides, and wishing you a wonderful rest of the day ahead. Okay, so thank you. So we move on to our second speaker for today, which is Dr. George Mountis, Managing Partner of Delfi Partners and Company. George specializes in corporate finance strategy, advisory, turnaround and restructuring, real asset management, and NPL workout. Prior to joining Delfi Partners, he worked in various other positions, including Group Strategic Developments and Planning Team of Hellenic Bank and the Group Mergers and Acquisitions and Strategy Department of Bank of Cyprus. Currently, he is also acting as visiting fellow at the University of Birmingham and UCL, where he lectures in the fields of banking, real estate, corporate finance, and asset management. George is a graduate of Birmingham City University, and he also holds the CISI Advanced Certificate of the Financial Services Legal Framework. He is also a senior member of the Royal Institution of Chartered Surveyors and a qualified member of the Institute of Directors. Today, George will talk about the real estate investment opportunities in Cyprus and UK. George, you can unmute yourself and start your presentation.
I haven't got a fancy presentation like the minister, so whoever else speaks here, I think would be nowhere near as good as Natasa. I mean, I run a real estate asset management practice, and we have a bigger kind of presence in Cyprus and Greece, and a smaller presence in the UK and in London, and of course, Italy. We just started our operations there. I mean, I just wanted briefly to tell about a few. I mean, what we've seen nowadays is that there is a huge demand for Greeks and Greek Cypriots to invest in the, I mean, we operate in the London and Greater London area. So a lot of resi assets and small commercial assets that they have good opportunities. We have seen more and more appetite nowadays. But to be frank, we have seen the opposite as we're about to set up our own fund here in Cyprus, regulated by CySEC. So we have seen a movement, as Natasa mentioned, for in smaller funds, London-based, to see what kind of tax incentives and regulatory incentives are in place, so as they will transfer potentially their presence from London to Cyprus, or at least their holding structures and fund management structures. So, I mean, today I just wanted to discuss briefly what about the investment opportunities that Cyprus and the UK has, and vice versa, and what kind of demand there is. So I will start from Cyprus. In Cyprus, we have seen increased demand the last, I would say the last 6 to 9 months, from British expats buying smaller houses, mainly for retirement. And obviously Paphos, the area of Paphos, Limassol and Larnaca, the seaside cities, had greater demand. And we have seen more and more demand with normally houses up to €500,000 and below. Obviously, there are questions, and I've seen in the Q&A, some of the investors that they had loans here, they've been asked to repay them. Now, don't ask me any questions about how they should approach this, but I believe they should speak to their banks directly. It has to do with Brexit, presumably. And currently, I wish our legal counsel was here, so as he'll be able to tell you a bit more about that. But overall, the demand that we have from British nationals to come to Cyprus is for smaller kind of residential assets, either primary or secondary residences, normally closer to the sea. So Nicosia is not a hotspot for the Brits to come and relocate. I mean, we haven't seen in Cyprus from the UK, despite the fact that quite a few of the funds that they have already invested and were working on them, some of them American, are all London-based. We have seen big players eyeing non-performing loans, collateralized non-performing loans. So we had the last 2 years, 3 or 4, one of the biggest investments that we had here in Cyprus. All of them are American or British, London-based funds that they have acquired these loans, and they're monetizing through the enforcement of the collateral. Now, so in a nutshell, to summarize, for Cyprus is mainly for primary and secondary residences. We have seen, though, appetite from Cyprus and Greece, investors, either high net worth individuals or semi-institutional investors, to acquire opportunities in London or other parts of the UK, mainly Birmingham and Manchester, but I'm going to focus more on London. And they were willing to find opportunities, either value-added investments like semi-completed developments or developments that they need renovation. And our team in London, in Mayfair, has been very active to source these deals and help them through the due diligence, valuation and acquisition of this asset. I mean, we have seen I would say the last 3 or 4 months, we have more and more inquiries from corporates and high net worth or individuals to acquire assets as a diversification kind of means in London. So Brexit has been in a way affected the London market, obviously, but at the same time now with the new tax incentives that the current and existing government is providing, more and more people are kind of eyeing of opportunities. And again, in London, quite a few of them, they will want resi, you know, in W1 or W2 to be acquired at 30% discounts. I mean, we have seen them day in, day out. These discounts do not exist or rarely exist. And but there will be opportunities that the opportunities that do exist, you know, are attractive for investors from Cyprus and Greece. And one issue that currently the Europeans are facing in the UK, if they haven't got permanent residents there, the financing is an issue. So a lot of the Greek and Greek Cypriot banks provide financing package to acquire real estate. So financiers from non-retail banks in the UK are also kind of potential lenders to acquire real estate in London. But overall, there is a big movement right now, and we have a lot of inquiries that sometimes we cannot match the demand with the existing supply at the prices they want, of course. So overall, I think, you know, the government is on the right track, and I think Natasa very well said we need to give more incentives to both the Brits and the Greek Cypriots to invest in both countries and vice versa. And, you know, the fact that we have an Anglo-Saxon kind of common law-based legal system, we need as Cyprus to capitalize on that and sell ourselves a bit more aggressively, because sincerely, especially with this fund management industry, and I'm focusing mainly on the real estate front of the fund management industry, I believe it's something that, you know, we can be another Luxembourg of Europe, and Cyprus is very well positioned tax-wise, legal-wise, and infrastructure-wise, especially we're a professionally driven economy, to capitalize on that. We have been, it's early days, and I'm not being critical, I include myself in this, because I mean, I haven't been to London for a few months now due to COVID, but you know, we need to be able to capitalize more than anyone else in Europe due to the fact that Cyprus' background and ties with the Great Britain. I mean, I haven't got anything else to add. I know I have only limited time, but if you have any questions, I'm always up for discussion either via email or via text, and will be more than willing to answer if we can answer. Thank you. I'm a bit short. I know I might have a bit more time, but really, I mean, just ask me any questions you might have. Xenia, I think the floor is all yours.
Okay, thank you so much, George, for the wonderful presentation. Okay, we are moving now to our third speaker for today, which is Mrs. Andrea Kallis. Andrea is a partner in the corporate and commercial and banking and finance departments of Elias, Neocleous and Co., and deals mostly with international clients and transactions involving entities with foreign interest. She advises on matters relating to commercial laws, employment policies, restructurings and reorganizations, corporate governance and structures, telecom projects, and contract drafting. Andrea has worked closely with international law firms in order to advise and guide them on regulatory and technical matters under Cyprus law, whilst coordinating various teams around the world to achieve structured and full comprehensive with the relevant laws relating to transactions. Today, Andrea will be exploring the question of whether in the wake of Brexit, Cyprus and the UK are now facing a divorce or a long-distance relationship, and highlight new ways in which business relations might continue. Andrea, we're looking forward to hear your presentation. The floor is yours.
Thank you, Ksenia. Just going to share my screen with everyone. So first of all, thank you to Natasa for her excellent introduction. It's very much in line with what my presentation will be going for. The title of my presentation is a little bit of a clickbait. And in case you're one of those that rolls down to the comments for the answer is it's not a divorce. So in terms of what we see in terms of law firms, in terms of the service sector, we want our clients to feel secure when they work with Cyprus, and we feel that the services industry is pretty much world-class in terms of both its individuals and in terms of the engagements that we enter into. So just as an introduction, I'm just going to go through the engagement period with Great Britain, the divorce, then the long distance relationship, and then the common path that we need to pave. So no need to say that we've had a very special relationship. Cyprus has had a very special relationship with Great Britain. Cyprus is in the top 10 of countries with UK-born migrants, and actually the lady giving the presentation today is one of them. So UK citizens living in Cyprus represent the highest percentage population compared to any other EU country, and that can't be dismissed. So I think the figures are about 38,000 Britons in Cyprus, and that does create a momentum as well. So following the 60s, when we had a very different model of agriculture and tourism, then we had the 90s when we had, a very different model, and then now we see the times when we're under the EU. And Cyprus and Great Britain have, as Natasa said as well, very good relations. We speak English very fluently. It's commonly used for business. Courts use English for their evidence without any issues. They would only ask for translations if it's not the official languages or English. Cyprus companies have been connected to the UK, so it's more than just the common history. We do have a lot of exposure, UK exposure in Cyprus. Most of the workforce of professional services are UK trained or educated, and Cyprus and the United Kingdom are both members of the United Nations and the Commonwealth of Nations, and up to January the 1st, the European Union. So during our 15 years of marriage under the EU vows, we had a very, let's say, a big change to Cyprus. We've moved away from the 90s, where we had the sort of liberalization of Eastern Europe and Russia markets through Cyprus and the trade that happened through there. 2004 was a very big year for us. It started our journey under the EU umbrella. We had level playing field with the UK in terms of trade, passporting via freedom to provide services, freedom of establishment, and it strengthened the business ties between Cyprus and the UK and the expat community. So British retailers with operations in Cyprus are no longer not a novelty. I remember they used to be, but that's not the case anymore. So since joining the EU, Cyprus has consolidated its position as an international financial center, despite our small geographical location area, and a portal for cross-border investment between all the main economies of the world. It's a low-tax jurisdiction. Fiscal and regulatory regimes are fully in line with EU norms. It has a simple, modern tax system offering predictability and planning, and a network of more than 60 agreements for avoidance of double taxation. So everyone talks about the workforce. I will mention it myself. More than 40% of the workforce have completed tertiary education, and mostly in Great Britain. So under these 15 years, where we had the same EU directives with the UK, we had the same EU marriage, Cyprus and Great Britain grew even closer. Cyprus was again the choice for subsidiary UK companies, holding companies, asset management companies, Cyprus structures, real estate, lending security to other group companies, corporate finance. And during this time, UK companies also set up what we call overseas companies, where it's a mirror. So you have the company's house in the UK mirrored in the register of companies in Cyprus, and the entity is the same. So you don't even need to register a separate legal entity. So we move on to the next chapter in the GBCY's history, which is the divorce, unfortunately. So it's a 1,400-page withdrawal agreement. It's very complex, it's very legal, and it was passed along with a series of other agreements swiftly at the end of 2020. So the 7 top issues that we see in our line of work are, number 1, common law and the recognition and enforcement of UK judgments in Cyprus. Now, this is a nightmare for us lawyers, I have to admit. But the good news is that because Cyprus follows the common law jurisdiction, we actually, as compared to all other EU jurisdictions, we will actually get through it in a not so messy fashion. So the reason being is, just as George has said, common law is a major advantage for Cyprus. And what common law does is essentially allows you to transact business based on principles. So it allows a lot of predictability. You know that if you have a company in Cyprus, you won't follow different rules from what you follow in the UK. The principles are the same. The limited liability company, whereby whatever rules are followed in terms of insolvency and shareholders' liability and directors' duties are all followed in Cyprus. So this is a huge advantage, and it will shield us from the changes that will come, because essentially now, post-Brexit, the UK does not follow EU law anymore. You only have until the 31st of December 2020, where there was essentially a snapshot of all EU law into UK legislation. But after that, it will take time, but after that, there will be big differences. But the principles of common law will remain. So once we move past, and I think it will be a few years, because I don't think the UK will want any more Brexit issues. So they will stick to the EU framework. They will follow the main legislative patterns that all the other countries will follow. But once it does start changing its internal law, Great Britain will diversify itself from the EU legislation and case law. But Cyprus will always have the common law connection, and that will be a very good pro-business advantage, as George said as well. So freedom of goods, that is something we see now as well. We also have a lot of questions at our law firm concerning the SBA basis. So although the SBA is considered not to be a part of the European Union, the sovereign bases actually act as a non-UK entity as regards the freedom of movement of goods. So they go through normal customs when things fly out from the SBA to the UK. So there isn't some kind of UK connection. There's the free borders are more maintained between the sovereign areas and the Republic of Cyprus, rather than the sovereign areas and the UK, which is interesting legally for us. Now we have passporting of services. We have a lot of questions at our law firm. This is a hot topic. We receive a lot of inquiries from businesses that operate in the UK in the financial services sector, payment services sector, banking sector, insurance sector, and even live streaming, audio-visual sector. All companies had a passport. They were, I mean, for example, even BBC cannot stream now under the passport that it has. Everything concerning passporting, now we see a big trend. We work with them for the regulatory implications of their loss of passport and how it's affected UK businesses. We've seen a big outpour of financial services companies into Cyprus. Either they use Cyprus as the home authority and they passport out into other EU companies and other EU jurisdictions, or they passport to Ireland, for example. We've seen UK companies passport to Ireland, and then from Ireland they passport to Cyprus and the rest of the EU. So the other issue we see a lot is data protection. So pre-Brexit, we see that data from the UK and Cyprus free. It just transfers, there's no issue. But post-Brexit, the personal data transfers have to be subject to GDPR requirements. So unless the European Commission notifies us of any adequacy decision for the UK, which is quite likely, personal data will be able to be transferred free. But until then, it has to go through the normal GDPR route. So that's also been an effect of the divorce. We have IP issues as well, and halloumi, as Natasa has mentioned. IP is very important. All our clients now are looking into more tech industry products, or they're speaking to their creators to see how they can protect their ideas. I mean, if you just think that the US economies, how its business of ideas are now worth more than the US's residential real estate, it has to be something that businesses must realize, that if they have ideas and they want to protect them, they have to protect them because IP rights are their assets. So IP has been affected by Brexit. Fortunately, the good news for Cyprus companies are that the withdrawal agreement has not endangered IP. So Cyprus companies have a UK comparable IP right born as soon as they have their EU IP. So if you have European trademarks, Brexit does not affect that. So it's very important. This was one of the sort of red lines for the withdrawal agreement, and we're very happy to see that, at least for now, if you have an EU trademark, it's recognized in the UK as well under this comparable sort of reciprocity action. So Cyprus businesses with ideas that they want to safeguard in the UK post-Brexit, they can do it through the normal route, through the EU IPO. On the other hand, UK businesses also can apply to the EU IPO for EU trademarks. So a UK business can apply through Cyprus to protect itself, its assets in the EU. We also have parallel imports, which has been important. We've worked with international brands that, for example, from the time that Cyprus was not in the EU, we had a lot of cases where you had parallel imports. So for example, Coca-Cola, a non-EU Coca-Cola, Coca-Cola Malaysia, cannot sell its Coca-Cola in an EU country, whereas EU members can sell parallel imports. So you can have, for example, pre-Brexit, you could have Coca-Cola UK sold in Cyprus. Now, post-Brexit, so Europe's come down a little bit on this because it only works the other way. So you can sell Cyprus Coca-Cola in England, in the UK, but not the other way around. So that was a little win for the EU. So parallel imports for goods entering the UK from EEA, EU jurisdictions, they are fine. The IP rights cannot stop the import of these goods. But for the other way around, which is goods exported from the UK into the EEA, EU, IP right holders have the right to stop them from coming into their country. We have the halloumi, which is, as Natasa mentioned, quite important for Brits. 40% of export sales go to the UK. We have the European Commission's decision to register halloumi as a PDO, which is a protected designation of origin. And the Commission's decision to register halloumi is estimated actually to have an initial setback to Cyprus's exports to the UK. But the government, fortunately, has foreseen this and is willing to financially support farmers for the sufficient production of the milk requirements.
Sorry, Andrea, we have about another 1 or 2 minutes if you can
Yes.
your presentation.
Yes. Okay, so this DPO also carries on to the UK. So you cannot make halloumi in the UK just because you're not in the European Union. We have the tax, which is quite standard, you know, the effects of Brexit on that, work permits and healthcare. Fortunately, there's been a reciprocity for and a bilateral social and healthcare agreement that continues after Brexit. So that doesn't affect the UK expats here. We have the long distance relationship that will continue. It's a service-driven economy for both countries. Therefore, our course is aligned on that. There are incentives for both companies and directors in terms of tax relief for the company and for them personally. We also have an alignment with the objectives of the UK business ecosystem. It's what we always talk about. Cyprus needs and wants the UK as a partner because we do want the UK business ecosystem, which is more than just having common law and the same laws. We need inclusivity, we need the green economy, and we need a new common path. And to build that common path, we need to have a circular economy to promote the interest between the two countries. We do that in terms of the headquartering and the relocation of UK companies to Cyprus under the new fast-track business activation mechanism, which Natasa spoke about. This will allow uninterrupted continuation of business through the EU. Cyprus is a very valuable partner for the UK, which can act as a secure and clear portal to Europe. Technology is a huge thing that will impact Cyprus and put it on the map. Cyprus will no longer be confined to only its geographical location as a small island. Technology will help us become actually a part and a partner of bigger entities and multinational corporations in terms of their partners. Also, 50% of the UK's production is channeled to the EU, so we see a lot of gaps in the Brexit trade agreements and succession frameworks, but we hope that Cyprus can act as a valuable hub. And also the last thing that we can all do is lobbying for the promotion of Cyprus Great Britain business. In order to reinvent Cyprus and Great Britain's common path, we need to take positive steps, and lobbying is important. The Great Britain Cyprus Association we are all here today for is one of those steps. Collaborations such as this support and reinforce commercial and economic relations between the two markets, and I hope that my presentation today has influenced towards this result as well. Thank you all today. If you have any questions, I'll be looking through the Q&A later on to see if there's anything that I would be able to answer for you today.
Thank you so much, Andrea. Okay, now we're moving, because we have a lot to cover today, we are moving to our fourth speaker, Michalis, Head of International Banking Unit of AstroBank. Michalis has been working with AstroBank since January 2010, currently holding the position of the Head of International Banking Unit. He started his banking career in 1989 with Bank of Cyprus Limited, where he held various positions in relationship banking, retail, corporate, and international banking. He is a holder of BSc degree in Financial Services from University of Manchester, and he's also an associate of the Chartered Institute of Bankers of England and Wales. Michalis today will give us an overview of the Cyprus banking sectors and analyze the requirements for satisfying regulatory obligations efficiently and explain the shell company's definition. Michalis, we are ready for your presentation. The stage is yours.
Thank you, Xenia. Thank you, the Great Britain and Cyprus Association, for this excellent event, which I'm sure it will further enhance the very good relations, business relations between the UK and Cyprus, either before or after Brexit. Just allow me to share my presentation. So, over the last 7-8 years, the Cyprus banking sector has undergone a major transformation. Following a number of mergers and acquisitions, we have witnessed a consolidation of the banking system in Cyprus, which resulted in fewer, stronger banks able to withstand any adverse developments of the economy, such as the results of the COVID pandemic. All banks are now recapitalized, with enjoying high liquidity and capital ratios well above the minimum requirements. Another trend that we have seen is the deleveraging of the banks. Indicatively, the banking industry accounted for 650% of the country's GDP back in 2012. And this figure is now more in line with the Cyprus economy at less than 300%. One of the major challenges that Cyprus banks faced and had to address were the very high non-performing loans. A major progress has been achieved, which the significant reductions. Although we have still a long way to go, most important to note here is that all Cyprus systemic banks have passed the rigorous stress test of the European Central Bank. And another major change is the reform regulatory framework, which is now fully harmonized with the EU legislation. And not only, actually, Cyprus was the first European country, EU country, to fully implement and adopt the fourth AML directive. Also to note that all Cyprus banks are under the single supervision mechanism of the European Central Bank. So one of the major changes that occurred in regulatory terms the last few years was the introduction of the shell company definition. Shell companies now fall outside the scope of the banks and their customer acceptance policy. So let's see what the characteristics of a non-shell company is, which are of course very welcome and acceptable by the Cyprus banks. So a non-shell company must have physical presence and activity in the country for corporation. By presence, we mean control and management, and not just a virtual presence. It needs to have an established business activity and an independent economic value. And the tax residency of the company should not be in the list of non-cooperative jurisdictions. In any way, a non-shell company must prepare and submit to the bank audited financial statements. Of course, not all companies bear all the characteristics, and exceptions apply to the companies that will not have a physical presence in country of the corporation. So the major exceptions is when a company is holding. So a holding of real property, holding of IP rights, holding of trademarks, holding of the shares of a non-share company. So the holding status of the company allows us to proceed with account opening, as long as the activity of the accounts relates to the exception that to the holding status of the company. In cases of group of companies, companies that act as a treasurer of a group are again accepted. Also, we can accept customers that are corporate customers that are engaged in established and legitimate business activity and where the ownership is fully identified. So in all cases, irrespective if this is an obligation in the country of incorporation, corporate customers need to prepare and submit audited financial statements under the IFRS standards. So all in all, if we can describe the conditions and restrictions for account opening in one word, I would say that this is transparency. So transparency as regards the purpose and the activity of a corporate customer, transparency as regards the source of income, the ownership, and we need to obtain, of course, documented proof of the source of wealth of the shareholders or the ultimate beneficial owners. In any case, a face-to-face meeting needs to be conducted with the controlling person of a corporate customer to verify the economic and business profile. To make it these requirements satisfied and yet have a smooth and problem-free account opening process, we and all the banks in Cyprus which are involved in international banking have assigned experienced relationship managers who guide the customers through the process of account opening and act as a single point of reference for any banking requirement. We also work extended working hours, so to provide for different time zones. And in the cases where a new customer, a new corporate customer is introduced by what we call approved introducers, which are professionals like lawyers or service providers who are regulated, supervised and regulated for that AML procedures, we can accept a video meeting so remote account opening can be achieved. Cyprus being an international financial center for over 3 decades has acquired efficiency in executing payments all over the world in all major currencies. So lastly, a few words about us, about AstroBank, a small but full-fledged bank offering all kinds of banking services from international banking to large corporate lending, shipping finance. We have a retail bank network in Cyprus. We offer, of course, private banking, treasury services, and trade finance services. Again, we offer a big range of card products and services, and we have user-friendly internet banking. So lastly, a few figures for AstroBank, just to show our equity, loans, assets, and total deposits. So many thanks for your attendance. Thank you, Xenia.
Okay, thank you so much, Michalis. And now moving to our fifth speaker, Ms. Stella Zenios from Exsus Group, Executive Director of Exsus International and part of the Exsus Group. Stella, having been born and educated in the UK, started working in a renowned UK bank after 10 years, was promoted to the position of Assistant Manager for 3 branches. She then moved domicile from UK to Cyprus when she married a Cypriot and started her family. In Cyprus, she joined an international private bank in Nicosia, and after 11 years, she was promoted to Vice President of Banking Operations. Stella then moved into corporate services fields and joined companies as General Manager and Director. Over the following 11 years, having started from scratch and opening and running an office in the UAE, the company expanded to 30 staff. In early 2019, she moved back to UK and opened an international office of the Exsus Group, growing the portfolio exponentially. A decision has now been made to move the head office of Exsus from Cyprus to London in the near future. When asked about the core reasons of her success, Stella said it was simple: total honesty and transparency with clients, connecting the right people to other like-minded individuals or business concerns, and a lot of hard work. Today, Stella will talk about banking services in UK and other general information about UK companies. Stella, we are ready for your presentation.
Ksenia, thank you for your introduction. I've been given a cap. We've all been given a cap of 12 minutes each to present. So I'll try and be clear, quick and concise in short form, because I have quite a bit of information to go through. So we'll start with a quick overview on banks in the United Kingdom, following onto alternative banking solutions with payment institutions and EMIs in the UK. So the banking sector in the UK is regarded as the largest sector, and it is considered to be the 4th largest in the world. Banking in the UK is highly developed, with new entrants in the sector being driven by cutting-edge technology and innovation. It's also considered being the largest financial centre in the world. With a staggering amount of approximately 100 billion payments made between 2019 and 2020 alone, the UK's banking sector has the deep penetration of banking across the country. Banks in the United Kingdom can be demonstrated by the fact that nearly the entire population of the UK holds a debit card, and about 2/3 of the population is said to have a credit card. Structure of banks in the UK. There are different categories of banks in the UK. Each category of banks cater to varying needs, ranging from personal to business needs. So the 4 major categories of banks in the UK are as follows. We have the central bank. It's the Bank of England, or we call it the BOE, and also happens to be the world's 8th oldest bank. The Bank of England is tasked with setting up and maintaining the monetary policy and financial stability of the country. Then we go to high street banks. High street banks are like retail banks that have multiple branch locations. Given that these banks provide retail services, they mostly serve the general public. This means that instead of targeting a specific market or type of customer, they service a wide range of customers. A major characteristic of high street banks is that they are widespread and are located in any commercial sector of both towns and cities. We'll go into business banking. Business banking services are those which are offered by high street banks as well. These services are provided in addition to what an ordinary account can offer. Hence, these are offered as additional services and for a certain fee, and they vary with bank to bank. Investment banking are financial institutions that offer investment banking services to a range of customers, from individuals, corporations to governments. These investment banking services are offered by these institutions where they invest in stocks or other companies, as well as bonds. Now I will lead on to payment services and electronic money in the UK, which is governed by the Financial Conduct Authority, called the FCA, and in our books is an alternative banking solution for the UK, for EU and other country members. Just a small introduction, the FCA helps businesses navigate the payment services regulations and the electronic money regulations, together with relevant rules and guidance. It is aimed at businesses that are seeking to become authorized payment institutions or small payment institutions, collectively called PIs, authorized e-money institutions or small e-money institutions, collectively called EMIs, registered account information service providers, and credit institutions which have to comply with parts of certain laws called PSR 2017 and EMRs. It's a very in-depth subject, so I'm not going to go into those regulations now. If you need any information, just let me know. When carrying on payment services and e-money businesses. So basically at Exsus, we can open corporate business accounts for EU country companies and for other parts of the world as an alternative banking solution. We use a very simple pre-assessment approval tool prior to actually applying for an account, business account. It has been tried, proven and tested, and works well for companies that need an alternative banking solution. We work with an EMI and other EMIs and payment institutions, which provide international SWIFT transfers, SEPA transfers, and CHAP services. And they also, some of them offer free banking on monthly maintenance fees for SMEs, which are small, medium enterprises. Of course, all subject to compliance approval. If you need any further information, just either ask in the Q&A or send us an email and we'll get back to you with all the information that you need. One important point is that the directors do not need to be local UK residents with these EMIs, which would be required with UK retail banks, and that's the difference. They can be EU or from any other part of the world, again, subject to compliance approval. As Michalis said earlier, the banking industry globally is becoming more and more transparent, especially with the central bank directives, substance, management and control, business activities, and enhanced due diligence checks where required. Plays a big role in the compliance industry today. So we can no longer open a bank account anywhere in the world within a few days anymore, but perhaps a couple of weeks and no longer. I'm now going to go on to my next quick presentation about UK companies. This subject matter is about sole traders versus limited companies. It's just a few facts and a few pointers for your awareness. Some small facts, and we call them pros. The UK is a trusted and respected jurisdiction, use English law and English courts. The Union flag is a design icon. High net worth individuals like to boast about their UK connections. Many non-UK businesses, especially when it comes to China, like to use UK fronting companies. And the ICAEW is setting the standards for China and India, and we are waiting for the updates on this. The sole trade route may be the preferred pathway for many people starting out and running a business, but there are definite advantages to be gained by operating as a limited company instead. According to the latest stats at Companies House in the UK, there are a shade more than 5 million incorporated companies in the UK, and roughly 93% of those companies are active. Here are some of the main reasons why setting up a limited company, or to give it its posh name, incorporation, might be given the nod over the sole trader status. You get protection through a limited liability. Taking calculated risks is part and parcel of doing business, whether you're a sole trader or a limited company, but only the latter insulates you from a calculated risk gone wrong. The former will leave you out in the cold. The law has said that a limited company has its own legal personality, which is separate from people who make up the company itself. This means that third parties, such as clients and suppliers, enter into contracts with the corporate entity rather than individual directors and shareholders. The huge plus point of this legal distinction is that if you run a limited company as a director, you have limited cap liability for its debts, which normally works out to the amount you paid for the shares, coupled with any unsecured loans made by the company. So if the company runs into trouble or goes belly up completely, you won't be personally responsible for any of its financial losses. One exception to the rule is that if the company's creditors lose money through fraud, you've committed as a director, in which case you'll incur unlimited personal liability. By contrast, sole trader status affords no protection from financial claims. If a business goes wrong because of a self-employed person and their business is treated as a single entity for tax and administration purposes, they have potentially unlimited personal liability for their business debts, and in certain circumstances, even their homes may be on the line. I'm going to talk about tax and national insurance efficiency a little bit. Given Benjamin Franklin's famous quote that there are only two things certain in life, death and taxes. Any opportunity to lower tax payments is always a welcome one. As a director of a limited company, if you take a small salary and most of your income comes in form of a dividend, you will still be entitled to state benefits without paying any employer or employee national insurance contributions. Dividends attract less tax than salary and are not subject to national insurance contributions, whereas a sole trader entire income is subject to national insurance contribution. With a limited company, higher take-home pay is clearly the order of the day. And there is a take-home pay calculator online on any website where you can make your calculations accordingly. However, changes to the dividend taxation system over the years have seen some of the tax benefits reduced and limited liability shareholders facing higher taxes. But for many people, it can still be more tax efficient to operate as a limited company. Improve reputation and credibility. Confidence is critical in business, and a limited company has a veneer of professionalism, which can still instill confidence in your business. Some clients, large corporations, and those in the financial sector especially simply prefer to work exclusively with limited companies, but others flatly refuse to deal with unincorporated businesses. So having a limited company can present new business opportunities that may not have otherwise existed. Other advantages of a limited company include it's not that expensive or difficult. If you ask people how you'd go about forming and setting up a limited company, chances are they'd state back to you bluntly, a common misconception is that incorporating is some kind of bureaucratic obstacle course and that you take months and cost thousands of pounds. The truth is, though, is that you can incorporate a company online in less than 10 minutes. And all of the above, the cost is probably a family dinner at a restaurant. Easier access to finance. The separate legal entity of a limited company may make it slightly easier to secure finance and help grow your business than sole traders. Also, companies can raise capital by issuing new shares to shareholders and new investors. To anyone really except Joe Public, only public limited companies can do that. On the other hand, sole traders have to raise new capital from their personal resources. If they happen to be cash strapped at the time, that's pretty much that. Securing a trading name. Once you register with Companies House, you save yourself some money and use our formation service. The company name is legally protected, which means there can only be one company in the UK with the same name or anything too similar. The trouble as a sole trader, someone else can use your trading name and you're powerless to stop them. Worse still, if they're into dodgy dealings, think cowboy builders and ruse traders, this could hurt your business no end and put you through the stress and inconvenience of having to change your trading name and potentially lose all the hard-earned branding recognition that you've built over the years. Don't forget, though, there are some rules around naming your businesses. And you can contact us to find out more about...
Can I remind you a bit of the time? We passed over 13 minutes now.
Yep, I think I've nearly finished. Is that okay, Ksenia? Can I continue?
Yes.
Okay, we'll go into protecting a trading name for future business. Let's say you've had a light bulb moment and you've got an inspired idea and a name for your business, but you've neither had the time nor the capital to develop it just yet. Instead of abandoning your idea altogether, you can set up a dormant company and put the business on hold and protect its trading name at the same time. In the eyes of the HMRC and Companies House, a dormant company is one that doesn't trade and has made no significant accounting transactions during the financial year. You'll need to let them both know that your company is dormant and that there's a few things you'll need to file each year, but setting up a dormant company can protect all future interests. At Exsus, we are a group of companies. We have an office, a head office to be set up in London. We deal with all accounting, tax, company formations in the UK, and banking services, of course, in the UK. And if you have any further questions, I'll be pleased to answer them. Thank you.
Okay, thank you so much, Stella. Okay, now moving to our next speakers, which are Nick Shah and Alex Chrysafiadis from Adler Shine LLP. Nick Shah leads Adler Shine's tax services team responsible for delivery of corporate private client, tax compliance, and advisory services. He's a chartered tax advisor and qualified accountant and advises corporations, startups, owner-managed businesses on a range of complex tax issues such as restructuring and employment tax, as well as large-scale tax investigations, share and business acquisitions and disposals. Alex is one of the partners leading the audit and accounts team. With over 15 years of experience in practice, Alex's professional experience and expertise in corporate compliance serves a wide cross-section of companies ranging from smaller owner-managed businesses to large, complex international group structures. Alex has previously worked with top 15 practice firm, and his experience has enabled him to provide assistance to clients on issues arising from financial reporting regulations and assurance assignments. He understands the inherent audit and business risks faced by a large range of businesses that support his entrepreneurial and commercial flair. Nick and Alex's presentation is titled Optimizing Your Tax Position. Really looking forward to see how, aren't you? Nick and Alex, the floor is yours.
Thank you, Ksenia, and thank you to also the Great Britain and Cyprus Business Association. So just going to share our screen as well, and hopefully you can see that. So just to start off, introduction, thank you. We are a 9-partner London-based firm of chartered accountants and tax advisors. We specialize with owner-managed businesses, listed companies, both groups, both UK and international groups, high net worth individuals, and we also have a dedicated sports and media team who've also recently taken instruction in respect of the new European Super League, which is highly topical at the moment. So as previously mentioned by several of the speakers, there is a long history between the UK and Cyprus. And what we wanted to do was give an overview of the UK tax regime and the administrative requirements of UK corporate businesses. Stella kindly gave a nice little bit of a background there of the difference between sole traders and corporate businesses. So we wanted to elaborate a little bit more on that. And just to highlight, as Stella indicated, a corporate body is a legal entity in its own right. And these companies need to register with Companies House. There are typically 3 types of entities that need to register. That's private limited companies. They have the prefix of LTD, public limited companies, PLCs, and limited liability partnerships, LLPs. All of these entities have certain annual filing requirements. As a minimum, they need to file documentation with Companies House and with HMRC. Information registered at Companies House is on public record and is free to access by anybody. Traditionally, you'd have 2 main things you need to file annually at Companies House. That's a confirmation statement. It's an administrative document which just highlights the shareholders, directors of the company. And then, of course, your annual financial statements. With HMRC, again, you have an annual tax return and the accounts will be filed with them there. There are some additional filing requirements with Companies House and HMRC. Typically, HMRC, you'd have things like payroll, VAT, P11Ds, and with Companies House, anything that's changing in the administration of the company. So changes in directors, shares, or even your year-end date, change names. That takes me nicely to our next point about the accounting reference date. So most companies will have a 12-month accounting period, and they'll prepare their accounts to their year-end date, or as it's known as the accounting reference date. Most companies in the UK prefer to have a 31st of December year-end or a 31st of March being the calendar or financial year-end. But in the UK, unlike some other jurisdictions, you can actually have any day of the week as your financial period year-end. In addition to that, you can change it as well. So you can shorten your accounting period as often as you like, and you can extend it once every 5 years, although there are some exceptions to that clause as well. And the shortest an accounting period can be is 1 day, and the maximum is 18 months. The accounting reference date forms your basis of your filing deadlines. So if we take a traditional private limited company, the filing deadline with Companies House is 9 months from the accounting reference date. You have to file tax with HMRC 12 months from your filing deadline, but payment of tax is 9 months and a day. So they want the tax before you tell them what it is. There are some exceptions again to this rule, so it's not a hard and fast rule. PLCs, for example, only have 6 months to file at Companies House, and companies that are deemed large for tax purposes will actually pay payments on account rather than on 9-month rule. Any questions on that, please feel free to contact us because it can be quite complicated. The last thing I wanted to cover off was the audit requirements. So in the UK, companies require an audit, statutory audit, if they are itself the company or the group it belongs to, medium or large. If there is a listed company in the group, or if the company is listed, if there's any regulated activities, so banking, insurance potentially may require it to have an audit. And then there's some exceptional cases where if you have loans from the bank may require an audit, impose an audit upon the company. And finally, if it's the constitutional part of the company setup or if it's a voluntary requirement. The Companies Act defines what the size of a company is, and we have the criteria here. Generally, companies need to meet 2 out of 3 of the 3 criteria being turnover, assets, and employees. So the magic number is really the small company size criteria. So that's £10.2 million worth of turnover, £5.1 million worth of assets, or 50 employees or less. So if you meet 2 out of 3 of those, you're classified as small or micro, and you're then exempt from audit, as are dormant companies that Stella touched on there as well. There may be some other factors that may require companies to qualify for audit or exempt from audit. So again, please speak to us. And the size criteria here are different for tax purposes. So that's something just to be mindful of. With that in mind, I just wanted to hand over to Nick for some tax, and he'll be able to take you through.
Thank you, Alex. So currently, the UK tax system, I know Andrea mentioned the Cypriot tax system is very simple. I would say the UK tax system is quite complex. It's got layers and layers of legislation. So the challenge always is, how do you optimize your UK tax position? We always say UK is a good commercial financial center, so people do want to invest in the UK. So we act for quite a lot of internationally mobile people, high net worth individuals, corporates as well. And we always go on to say, what are you investing in? The taxpayer's life cycle is normally, what are you trying to do? What are you trying to achieve? What are you investing in? What is the long-term or the medium-term plan with this investment? What about when you actually are growing your business? How do you extract your cash out of the business? How do you extract the profits out of the business in a tax-efficient manner? You then have the sales side of your business eventually. How do you exit from the business? All of these have some sort of tax angles to it. There may be some reliefs available. There may also be some high tax issues which are there. So it is really important to protect these so you don't have unexpected tax charges. Finally, wealth preservation is quite very topical at the moment, very much in line with where we are currently. UK has something called inheritance tax. So you are actually also taxed on death in the UK, unlike in Cyprus. I seem to be grim in the UK, but it is that is how the tax works in the UK.
I think the view is, as Stella touched on earlier, tax and death is the one thing that's guaranteed in life. So your tax on death is a once in a lifetime event, so make the most of it.
And then when we're looking at the investment vehicles, going back to what are you trying to invest in? Is this, we look at a personal investment as a sole trader, which Stella mentioned. There's partnership as well, limited liability partnerships or traditional partnerships. This is really when two or more people come together to do some sort of a business. They're in business together, but more and more so we still have financial services businesses which are in partnerships. So quite important whether you register this partnership as a limited liability partnership or as a traditional partnership. We also have companies which are in the UK, obviously. We've talked about this, touched on this before. And there could be some sort of an offshore structure as well. You could be having inward investment in the UK, or an individual who wants to invest in the UK. How best to invest in? That is the million-dollar question. So as I said, main idea is, what is your long-term plan? How are you going to exit from business eventually? That's where we look at how we're going to optimize tax. Now, from a UK point of view, the residency status is quite important for tax purposes as well. Now, this does not mean where your passport is or where your nationality is. There's nothing to do with nationality in the UK. It's actually how long you've been in the UK, how long you're spending in the UK. If you're, as a ballpark, if you're going to spend 183 days a year in the UK, you could be considered to be a UK resident. What is the downside for this? The downside is that your worldwide income, not only the UK income, but your worldwide income can be taxed in the UK. So it's quite important, especially when we look at internationally mobile individuals. We actually want to look at their situation to say, what is the presence in the UK? What is the family presence in the UK? Do they actually work in the UK? Do they have a home in the UK as well? Now, if you have a home in the UK and you spend that 30 days, it doesn't need to be consecutive days in the UK. You could be considered to be a UK resident for tax purposes, and obviously, therefore, be taxed on your worldwide income. So important to look out for your residency status for tax purposes. We looked at why this is important. Obviously, the income tax rates for the UK, it's a progressive tax system, similar to Cyprus. We have a 20% basic rate tax, very small allowance, but then it goes up to 45%. But the reality is there's also a 60% tax as well in the UK. If one is going to be earning between £100,000 and £125,000 in the year, the tax rate there for the marginal rate is 60%. So very important, you look out for how you can claim your tax relief so that you're not between this magic £100,000 and £125,000 bracket. But otherwise, we have a large allowance for 40% for income tax for individuals. Now remember that this is for England only. There is some slight change in Scotland, but generally very similar. Now we mentioned, obviously, if then instead of actually you having individually having a sole trade business, you're doing business as an individual. If you do a business in a company, so your company is a good shelter for banking your profits. You personally can take dividends from that company. The dividend rate can be 7.5% to 32.5% as well. There's a higher rate of 38.1%, but the dividend rates are much lower than when you're doing business as an individual, as a sole trader. So we need to look out for that. Now, the good thing with that is that actually means that one way or the other, there is a corporate tax rate. So the corporation, your company, will be taxed. However, unlike sole traders where you taxed entirely for your income, or partners where they're taxed entirely for the income, whether you spend that money or whether you utilize that money for yourself, you're still taxed on your profits. If you have a company, the company itself gets taxed initially, but personally, as a shareholder, you will only get taxed when you withdraw the money out of the company. And so the company can be acting as a shelter for tax purposes, for personal income tax purposes. When we say 45% tax rate, you could decrease it slightly to the 19% tax rate. Be mindful, we are actually increasing our UK corporate tax rates to 25% headline for companies which have profits over £250,000. So that is not going to be actually progressive. So small companies still going to be at 19%, but larger companies making bigger profits, 26.5% and 25% tax rates from 2023. Now the residency rates, Michalis mentioned this as well. What about company residence? So the company can be resident in the UK to pay tax in the UK if it is incorporated in the UK, it is formed in the UK. But more importantly, if it has management and control in the UK. I'm not going to press more on this, but if you have a workshop, if you have an office in the UK, if you have staff in the UK, very well, this company can be considered to be a UK company, even though the company is registered in, say, Cyprus. So you could have a dual resident company, which we need to look out for. So important when we actually do the structuring of any of your companies, that we are not a dual resident company. Where is it suitable to be having a UK or actually a tax presence? We come to the third phase is to when you're growing your business, when you have a company, these are some of the ways you can actually withdraw money from the company for your own personal benefit. We talked about dividends. We know also salaries and bonuses. UK also has a favorable, less favorable now, but it is still there that the company can make a pension contribution for your personal self. You could also take a loan from the company itself. There are some tax consequences, but it is still possible. The reason why I say is, why would you want to pay 40% to 45% tax sometimes on withdrawing the money when you can take a loan which you have to pay a temporary tax, especially when you're actually about to sell your business in the future, because this acts nicely when you sell something. We are now going from income tax in the UK to capital gains tax. So when you sell an asset, it is going to be a gain subject to, not to income tax, but a capital gains tax rate. Look at the family. What about your family situation? Can you involve your family in the business so that they can utilize their own personal allowances in the UK as well? So important to look at all these aspects, but they are there to be looked at. All structuring is open at that time.
Nick, just like to warn you that we are over 14 minutes.
Yeah.
Like to, if you're near, to conclude.
I just wanted to touch on, just to show in terms of when you look at property investment, there's a stamp duty on entry at the moment in the UK. We have for individuals who are actually non-residents, non-resident companies as well. There's an additional stamp duty of 2%, which has been imposed from April. So watch out for this. It is based on your residence. There is income tax on rental income. There is also a restriction on how much you can borrow, how much tax break you can have from the borrowing as well. And then on the exit, there is capital gains tax as a sales side. Similarly, corporate has the same thing, stamp duty on the purchase, there is corporate income tax. At the moment, more and more companies, individuals are buying properties in companies, especially residential properties. So this is one way to shelter quite a lot of the punitive tax charges which have come in for personal taxes. Finally, wealth protection. How do you actually pass down wealth to your family, to your next generation? In the UK, there is a tax imposition on passing down wealth. Yes, there are some reliefs available as well, but it all depends on your status of your domicile status. Are you actually living how long have you lived in this country? Can you be considered to be domiciled? If you've lived in the UK for 15 out of 20 years or more than 15 years, you could be considered to be UK domicile, which actually means your worldwide income, your worldwide assets will be subject to inheritance tax. Inheritance tax rates are quite punitive as well. If you are not considered to be UK domicile, your UK assets will be subject to inheritance tax when you pass it on to the next generation. So important to look at your status, important to look at your spouse's status, your family location as well. your business situation of your assets. If you are actually going to be coming into the UK for say 10 years or longer, we may advise you to say actually try and pass these assets out of yourself into say a trust situation, so that it outside the UK tax net before before it comes into the UK, before you actually consider to be a UK domicile individual. The reason why I say it is the UK inheritance tax rate is 40%. So we have a 40% income tax rate, 20% or 10% capital gains tax rate, and inheritance tax for individuals is 40%. So the whole idea of private wealth for us, for individuals, is it is actually when you want to create your wealth, you want to maximize that enjoyment. You want to enjoy that. In order to do that, I would say you need to watch out, protect it. You need to watch out from the UK tax. There are layers and layers of legislation there. So please do talk to us if you need any assistance with the tax structuring. Thank you.
Thank you so much, Nick and Alex, for your presentations. Final presentation for today is about the Cyprus Financial Services. Allow me for a minute to share my screen. Okay, before I start my presentation, let me give you some background information about myself. For all of you who have never met, my name is Xenia Neophytou and I'm the Managing Director of CX Financia. Having a background in finance and accounting, I have been involved throughout my career in various managerial positions in all aspects of corporate services, company law, international taxation, and financial and regulatory compliance. My experience, both in advisory capacity and hands-on operations as a CEO and member of risk committees of several regulated firms, led me to the founding of my own company, CX Financia. 6 years and no regrets, I should say. We are proud to be offering our exclusive mix of services to our clientele in Cyprus and abroad. I'm an active member of the financial services community, participating in the technical committees for funds of CIFA and IPAC, and a board member of the Cyprus-India Business Association, regularly speaking at events about finance and investments. I'm very excited to be here with you today and looking forward to your interaction that will follow at the end of my presentation. Now let me start the presentation. Our previous speakers gave a bit of overview, but just to highlight some points about the financial services, which are considered pivotal to Cyprus economy and have attracted significant amounts of foreign direct investments. Cypriot banks are fully recapitalized and regulated by the Central Bank of Cyprus and the European Central Bank under very strict guidelines. For investment firms and funds, there is one regulator, the Cyprus Securities and Exchange Committee, the CySEC, which provides streamlined procedures and reduced bureaucracy. The Cyprus capital market continues to grow despite tougher conditions, and with it, the regulator is expanding to cope with the additional burden. Cyprus investment firms are rightly considered as one of the most suitable options by those wishing to professionally offer and perform regulated investment services and activities within the European Union, and has been the jurisdiction of choice for more than 20 years, primarily for Forex CFD brokers. The investment fund sector in Cyprus has grown exponentially in the past years. The time and cost required to set up a fund has decreased, especially with the introduction of RAIFs, and we have seen a lot of interest from investors interested to set up funds in Cyprus. Finally, Brexit has seen an increase in financial services companies and fund managers looking to Cyprus as a low-cost European base to retain EU passporting rights. Now, let's move to some statistics taken from the CySEC most recent publication for the industry and performance as at December 2020. As seen on this graph, currently CySEC has 779 entities under its supervision, a number that is up by 4.42% compared to 2019, during which it supervised 746 entities. 229 are investment firms, 142 are fiduciary service providers, 125 are companies listed to Cyprus Stock Exchange, and 283 are management companies and undertaking for collective investments. Despite the crisis in 2020, the Commission continued to examine new applications for the licensing of new regulated entities without any interruption. A total of 88 entities were approved, 69 of which are active in collective investments, 14 in the provision of investment services, and 5 in the provision of administrative services. Now, as seen in the previous slide, CySEC supervises 293 management companies and undertaking of collective investments that manage a total of 8.5 billion assets. In this graph, we see the growth of those 8.5 billion of assets under management over the last years, with the last 4 columns showing each quarter of 2020. As you can see in the graph, the growth has been exponential, and even now with the current crisis we face, the assets under management at the end of the quarter 4 have now grown by almost 3.79 compared to the same quarter of 2019. In this graph, we see the distribution of those 8.5 billion by management companies. IFMs manage the 52.5%, 22% is managed by sub-thresholds IFMs, and 20% by IFMs and usage management companies. Total net asset value at the end of 2020 was almost 7 billion. Now let's look at the investment strategies of funds. The first chart showing that the majority is AIFs and RAIFs, and only 5.2 are UCITS. The second chart shows the investment strategy of AIFs, with 43% invested in private equity, 14% in real estate, 10% hedge funds, and 29.8% in other investments. Now we move to some highlights of recent amendments in the law. We already mentioned the introduction of the Registered Alternative Investment Funds, the RAIFs, is a positive change that has helped strengthening the sector significantly, since the time and cost required has greatly decreased. A new regulatory category entitled mini managers for sub-threshold funds came under CySEC supervision last year, while a new investment product, crowdfunding, was launched following the implementation of the relevant laws. Derivatives on virtual currencies can now be offered by SIFs, which now qualify as financial instruments and fall under the applicable investment law. Therefore, transactions on derivatives of crypto coins, for example, is now a regulated activity. Finally, the 5th AML directive, which has been transposed into national law, significantly expands its range of application. Service providers of crypto assets or custodian wallet providers and other financial services for crypto assets now fall within the AML regulation scope, and the gate is now opened for service providers on crypto assets offering extended line of services such as financial services on crypto assets, which will be registered with CySEC. Now we move to see what are the Brexit implications for the financial service providers. Andrea, I think, mentioned as well some points. Will the UK financial service providers be able to continue to passport their services across the EU? As of 1st of January, UK investment firms no longer benefit from the MiFID II regulation and the provision of investment services and activities within the EU, therefore losing their EU passport and considered third country firms. So the next question will be, what happens to their subsidiaries or branches? EU subsidiaries controlled or affiliated to UK investment firms will need to obtain a MiFID authorization in one of the EU member states in order to continue to operate as EU investment firms. Branches of UK investment firms in the EU will become branches of third country investment firms and will need to comply with the national requirements applicable to the member states where the branch was established. Finally, in relation to the functioning of the markets and specifically in relation to UK trading venues for the purposes of the share trading obligations or the derivatives trading obligation, as long as there is no equivalence decisions by the European Commission, UK trading venues have become third country trading venues, and EU investment firms will no longer be able to trade the shares on UK trading venues. Similarly, UK market operators operating a trading venue or execution venue will cease to be eligible venues for trading shares subject to the MiFIR share trade obligation. To prepare for Brexit, the CySEC has launched a dedicated section on its website to serve as a Brexit information hub, aiming at facilitating the compliance of interested parties with legal obligations following the UK's withdrawal from EU. The Brexit Information Hub contains a comprehensive set of Q&As per regulated sector, all Brexit-related announcements issued by CySEC, and all Brexit-related circulars addressed to CySEC-regulated firms. So why Cyprus for financial services? As mentioned before, UK financial service providers have lost their EU passport and now considering other options for headquartering their business in an EU state. EU passporting rights are considered the most important factor for them, followed by ease of doing business and the taxation environment. Cyprus has seen an increase in financial services companies, fund managers, and e-money and payment institutions looking at the island as a low-cost European base to retain EU passporting rights. Cyprus' modern legal framework follows the latest EU regulation and is based on the EU common law system. Furthermore, and on practical point, licensing supervisory processes for the regulated entities, including legal, regulatory, and commercial documentation, takes place entirely in English. The main driver is the speed of getting over the line in Cyprus compared to other jurisdictions, and the professional level of financial services offering, which is high. Finally, the independent public supervisory authority, which is considered among the strongest in EU. So assuming that you wish to establish a base in Cyprus, what do you need to know? As CX Financier, we're professional advisors and compliance consultants, and acquiring and maintaining financial license is our expertise. The first thing to have in mind are the timeframes for getting the license. Overall, the authorization by CySEC takes on average 8 months, considering there are no exceptional circumstances surrounding the application. It takes approximately 1 month to prepare the application and gather all the necessary documentation. Following the submission of a duly completed application, CySEC replies within 2 to 6 months, depending on the complexity of the case, and gives a conditional license with some final provisions for activation and a time frame of a month for implementation of those provisions. A final inspection follows to ensure the conditions are met, and then the license is activated. It's possible to utilize the fast-track scheme of CySEC, based on which there is an additional fee of 25,000 paid to CySEC, which can reduce the processing time of the application by CySEC. At CX Financier, financial service license can be separated in 3 stages: the application and activation stage, and license maintenance. The first stage, most important aspect, is the preparation of the application and accompanied manuals and policies, which would outline the business operations as well as the gathering of all necessary evidence to meet the regulator's due diligence requirements. Communication with CySEC can be frequent to request clarifications or additional data regarding the information provided. The second stage, activation, involves setting up offices, hiring key personnel, as well as having key service engagements in place. Following activation, all financial institutions must meet their licensed obligations to maintain their license status, and this is the final stage. Financial firms must meet their reporting obligations as well as stay up to date with regulatory changes and updated policies and procedures accordingly. At CX Financier, we have successfully assisted many firms to obtain a regulatory license suitable for their business requirements and can fully project manage the application, providing turnkey tailored services. CX Financier was established in 2015 to assist financial services firms with their regulatory obligations. We assist with the licensing of investment firms, investment funds, and fund managers, as well as payment service providers and electronic money institutions. Our team provides regulatory advice and solutions throughout your business lifecycle, from startup phase to ongoing support once you have received your regulatory license, and support our clients with a wide range of additional matters, such as project management of regulatory and compliance projects. We can support the passporting of your license to other jurisdictions, assist in the preparation of the cross-border applications, and obtain legal opinions from host countries. Okay, thank you for listening, and I'll be happy to answer any questions during the next section of today's webinar. You can also send me an email or contact me to discuss further with your inquiries. And now it is time to open the floor for the questions from our audience, which I'm sure they are eager to start answering, also our speakers. So allow me to check the questions and answers. Okay, so one question is, what is the situation with UK residents applying for mortgages through a Cypriot bank? Maybe Michalis can answer this question, or some of the other panelists.
Yeah, we can, of course, there is no regulatory or any other restriction to consider any mortgage loan to any person who is purchasing property in Cyprus. Always we need to, the lending criteria need to be satisfied, repayment ability, the term of the loan, the property, the own contribution of the customers. There is no restriction. We can consider any request for loan facility.
Okay, maybe some other speaker would like to comment. Okay, I think. Okay, so there was another question. It's a general one. If there are any proposals for the government-supported apprentice initiative in an effort to get younger people into employment, this would also benefit Cyprus-based companies. Or maybe I would also put it more generally, if there are any incentives for younger people into employment. Some of the speakers would like to answer. I know there are many initiatives like training people, and also in order to be able to join the market, it's offered by ANAD. There are other incentives, so they make them be eligible into the society. The government is supporting unemployed people as well, as much as it can, with some schemes. Maybe some of the, Andrea, would you like to comment?
That's correct. So it's government supported in terms of not working for the government, but being paid by the government working for a private company. There is a minimum of age for certain sectors. There's a particular law that regulates the age and what sectors they can work on. So if you want, you can send me an email and I can send you the list of the different sectors, because it's not just one or two. So just not to miss out any, I'll give you the full list of how, you know, and the age at which you can start working.
Okay.
Actually, Xenia, this question was raised for the minister. If there are any plans for the future to attract youngsters coming from abroad, because we have many qualified Cypriots or even not Cypriots working abroad, that they would like to come back to Cyprus and work, but they want to something like an assurance that there will be good jobs for them, and matching the jobs they are having abroad, or at least near the jobs they are having now. This is a real question, actually. So we leave it for Mrs. Pilides or somebody in the government, and then we get the answer to the guy who made the question.
Definitely.
Yeah, and we agree that it would be a benefit for Cyprus-based companies, for sure. We're always trying to attract talent and retain it in the country, so we don't have any more brain drain and these things. So definitely it's something that I think the government would be on board with.
Definitely, yeah. Yes.
I have one question for each. Actually, I got it from other people, and I have. So I start with George, if he allows me. There are two questions. First is about the auctions. I got it a few days earlier. So they want to know more about the auctions you are getting involved in a few days. This is the first part of the question. And the second, you mentioned that you will establish business in the UK. You are already in the UK, but you are not doing so many businesses like in Cyprus and Greece. But they want to know what kind of business, you will be involved in the UK.
Okay, excellent. So first of all, for the auction platform, we have an online auction platform that we sell assets. We have 12 assets to be sold, and I think all of them will be sold in 2 or 3 weeks, but every month we'll be running an auction in Cyprus and Greece. These are mainly assets that they have been, some of them have been from private individuals, others from banks that have been repossessed. So there will be quite a few good deals there to be made, a lot lower than the market value. Our site is delfiauctions.com. So if you go to delfiauctions.com, you can see now the few assets and drone photos that we have available. So that's one.
So people from the UK will have the opportunity to,
of course, we
participate.
have 10 registrars from the UK so far.
Okay.
So that's one.
George, can I ask you a question?
Yeah.
When you say that properties in Cyprus are on auction for less than the market value, if they've been repossessed from banks, so that's the case, yes?
Some of them, not all of them, but some of them.
Okay.
Yeah. So the starting price is a lot lower, but there might be competition, so prices can go up depending on.
Not the prime properties you said before.
We might have some anchor prime properties, but the prime properties won't be heavily discounted, if you know what I mean. There are good opportunities there, and we have a lot of traction. I mean, we're running our first auction on the 12th of May, and there will be more opportunities available every month. So we're doubling our assets next month, and we're running an auction in 2 months' time in Greece. And hopefully by next year, we'll be running auctions in the UK as well. Now, coming to Savvas' question, I mean, what we do essentially in the UK, we have a team of 3 people currently and expanding. We're based in Mayfair. We have a serviced office in Mayfair. And what we do essentially there is we do property and asset management, valuations, and a lot of transaction management. We're selling, buying assets on behalf of investors, either private or corporates. So we have a portfolio from a Greek bank that we manage there, and we have a lot of expatriates either from Greece or Cyprus or anywhere, any landlords in London that we manage their estate in real estate. And we cover mainly London, central London and outer London. We don't do as much. We have some properties under management in Birmingham, but that's about it. So our main focus is London. Yeah.
I think there's one about, can I read one, Savvas? I will be buying property in Cyprus in 2 years' time. Would I lose my UK state pension? If
maybe for Alex or something.
So, I mean, my understanding is obviously we need to look at the position for personally, but generally you shouldn't be losing the state pension. You will be taxed in the UK. On the pension itself. So assuming this is a taxable pension that you are getting.
From the Cyprus perspective, I confirm that the way that Nick is describing it is correct.
Okay, can I move to the other questions? I go to Andrea now. Somebody asked about that. This is a question actually. The legal services in Cyprus and the quality of the solicitors are quite high. Why do, in many cases, Cyprus come to recover the pitfalls we fall in, and we don't get a best, let's say, project. Maybe we are talking about the permanent residency or things like that. Why, for example, all these good lawyers in Cyprus do not come together to help the government for the structure of something solid, so very competitive with the ones in other countries in Europe.
Okay, so this is the government versus private sector discussion.
Can we do it together? Can you do it together, for example, because we know that the high level of the law firms in Cyprus?
Okay, so the reason that the law firms level is quite high, because as I said, you have a very high quality education in the US, in the UK. You have experienced lawyers that work there and they come to Cyprus. So that's where the high quality comes from. But in terms of the passport and these things, obviously these schemes are made for the benefit of the country. They are supposed to increase the economy. And, you know, at a time where in 2013, Cyprus had a very difficult time. There are some people that are saying that intentions were good. In terms of lobbying, we do not have the power to change policies, but it would be, we don't have official lobbying in Cyprus as we do in other countries of the world. I agree that we have sent suggestions. Of course, we do not encourage anything that isn't something that we would practice ourselves. We always try to use our experience. We do send advisory notes to the government. My law firm has sent advisory legal opinions about things to hope to change different perspectives and different schemes and to better them. I mean, for one, for the passports, we agree that there are things that could be done better in terms of also benefiting the society in Cyprus and adding value to the people and not just on a transactional basis. I think this is also, we have to be optimistic that Cyprus will find that circular economy that Natasa was mentioning. A circular economy is very different to the models that we've gone through. If you think about how Cyprus's economy has, adapted through the years, I hope that as a young professional, I hope that we are getting lessons from our mistakes and that we will correct them. And all the lawyers and all the professional services do want, the private sector, I mean, we do want the reputation of our country to reciprocate to the quality of the services that we offer, or else we won't be a competitive country. So yeah, definitely, we agree with the fact that we want our reputation to be of a high quality, and we're all working towards that.
Okay, thank you very much. I move to Stella now. When we come to the banks in the UK, everybody can realize that they lose some income by, for example, from the foreign exchange. Most of the people when they do big transactions, they try to go through other companies in private, not the banks. And on top of that, it's difficult to open an account with the banks in the UK, but at the same time, there are some alternatives with other providers that they can open you an account within a day or a week maximum. Why this happens with the banks in the UK? You are muted. Yeah.
Okay, now I've unmuted myself. Okay, thank you for the question, Savvas. The first question with regards to conversion of monies from one currency to another. You have to understand that every bank in any jurisdiction has their set tariffs, their foreign exchange rates, their foreign exchange commissions. So a quick answer to that question is whatever bank you are with, every customer has its tariffs, its commission rates, its tariffs independently. So you can check them online. When they have an account welcome letter, they open an account, all the tariffs are public knowledge. So when people say, why am I being charged this? Why am I being charged that? Or why is this conversion so high? It actually depends on the bank. They have their own charging policy and their own exchange policy, but they actually, it's all public knowledge, if that answers your question. But mute. The next.
What about the opening of the accounts?
Okay, with regards to bank account opening, you can open, with UK banks, you can open UK companies, and you have to be a UK resident. If you're a director, you have to be a UK local resident to actually open a bank account in the UK. When it comes to opening bank accounts with payment institutions or in London, they actually they do not just open UK accounts. They open bank accounts for EU jurisdictions. They have their individual lists, so they can open, for example, Gibraltar. They can open Cyprus. They can open Greece. They can open, you know, various EU countries and other countries in other parts of the world. Again, it's a compliance assessed application. There is a pre-approval process. And the other advantage is that the director does not need to be a local UK resident. So say, for example, someone wanted to open a bank account in Greece or Cyprus or in any country, or an account was closed or an account was blocked, or for any other reason, the bank didn't want the account any further. Obviously, there are reasons behind that, but also my suggestion is to also have a backup bank account in case of, I always say to clients, if you can open your account in Cyprus or in the UK, always have a backup bank account. It's always good. And we find that with the payment institutions we work with, that this system works, and it's proven because we've actually tried and tested it. So yeah, any questions on that, feel free to come back to me.
Okay. The next question is for Alex and Nick. It's about the businesses from Cyprus. They wanted to come and do some businesses in the UK. Will they have all the information, for example, from your company or any other company, especially for tax and all things needed before they come there and they face the problem as in the running of their business?
Yeah.
Especially now after Brexit, because before Brexit it was much easier.
So in terms of the tax, it doesn't change. It's the regulatory aspects in terms of whether they're going to be living in this country. It's more from the individual's point of view. Are they going to be living in this country? How long are they going to be living for? What are the family ties as well? And why we're saying it is, it goes back to the residency status for UK tax purposes. Will they be considered to be UK resident, so that it's not only the UK income, but all over the world income, will it be taxed in the UK? UK wants as much of the tax revenue as possible. So it is actually putting the ducks in order to say, you know, we need to address all these situations, when they're going to come in, how long they're going to be staying in the UK, so that we can protect that asset outside the UK tax, because it is still, these are still doable. It's not that we are evading tax. It's all part of the tax legislation that we are going through, but it's something that we want you to prepare to do before you are coming into the UK, so that it's the protection from the UK tax net.
We have seen an increase in a number of UK subsidiaries being set up of Cypriot companies, or even directly owned companies in some instances. But we're always happy to have conversations with people before they go down that route and go down the rabbit hole. So, you know, our contact details are available. You know, always happy to have a conversation with people and have an initial meeting and explore the options.
So one of the other things that I mean, Cyprus, UK is more of the services aspects. Brexit has happened there are issues around goods which are coming to the UK from Europe and going out. So because of the customs duties, we've had to line up quite a lot of companies which will have a UK subsidiary of European companies, just so that they can continue trading. They don't incur excessive customs duty because the goods are moving, say, from UK to Europe and then coming back into the UK. Before, the movement of goods triangulation was quite easy, no customs duty. Now there is customs duty. And again, besides the duties as well, it's the time which is taking to actually get the goods out and in. So therefore, quite a lot of companies are opting to register a subsidiary in the UK for the same aspect.
Just a question, Alex. When it's when it comes to exports from the UK into the European Union, what's the new regulation from the 1st of July with regards to the D- factor?
So you mean the VAT de minimis?
The customs charge.
So yeah, I mean they are going to change. They are changing. They had postponed it and they're going to bring it up to July. It is going to be around the value of the goods. UK are still lenient on it. It's actually the European side which they are imposing duties and VAT. The VAT de minimis factor from 150 euros, I think it's going to go down to 0 if I'm not wrong.
Correct. Yeah.
So that is affecting quite a lot of the input VAT, which in the European countries. So goods coming from UK to Europe as well. So origination of goods is important, but this is to do more with how they're built, how the goods are coming through, where they're produced as well. It all is based on this the production cycles as well. But we've seen loads of companies who did not used to be registering in the UK simply because they can send out goods into the European country and then send it back to the client in the UK. That has actually stopped quite a lot because they want warehousing facilities in the UK so that they can push the goods out straight directly from UK to the UK clients itself. And that saves, there is cost to it, but that means you don't need to register the whole company in the UK. You can have a VAT registration only.
And an EORI number, of course.
Well, the EORI number is slightly different because that number is separate. It's linked to VAT, but you can have a non-UK company register for UK VAT only as long as it doesn't have any what we call sales staff or people working in the UK. So all they're doing is a warehouse facility receiving goods in the UK, and there's that same warehouse facility just sending out goods. So there's no processing of goods. It's literally packing it back and sending out to goods to a UK customer.
In transit.
Yeah.
One question for Michalis now. A lot of developers from Cyprus that I'm in communication with, they are targeting the British market after the last incidents we had in Cyprus with other issues. So, and at the same time, a lot of expatriates as well as British people want to buy in Cyprus. Don't you think that the banks should come together with the legal services in Cyprus to to place an attractive package and helping at the same time the people want to move to Cyprus to buy in Cyprus instead of somewhere else? I don't say that they should, for example, financing the whole property, but at least make their life much easier.
Okay, don't know, not my specialty, mortgage loans and financing in general. I feel that the mortgage rates have dropped over the past few years in Cyprus, so they are competitive. Now, when it comes to attractive packages other than the interest rates, there are restrictions from central bank that you need to satisfy, that you need to comply with. So, for example, if a purchase of a property is for investment purposes, which is for British citizens, then there is obligation to pay from own own contribution, 30% of the purchase price, or the market value of a property, whichever is the lowest. So, okay, there are restrictions, and this, as it is with all kinds of loan facilities, there cannot be a general package other than the what can we say, the interest rate of the loan. It's always at its own merit, because each case has a different risk level, so everything must be adjusted to the risk level.
There is one comment on what George said before, that now we see, for example, even the developers or the companies like you who are selling properties, that you are giving the priority to properties below $500,000 or even 300,000 or so. In the past, we used to, a lot of developers used to give a priority to properties around $1 million or so. Do you think this change of the focus of the sellers will attract more people coming to Cyprus to buy?
Well, I think the market conditions changed since last October with the Al Jazeera papers. So I think the properties which are connected to a citizenship scheme were the ones which are of higher value, of 2.5 million and more.
I know.
So I think now that the citizenship scheme is gone, and the residence scheme still applies, which is for 250,000, and it has the prospects are higher for the developers to switch to that market segment rather than the one that we got used to, especially in Limassol and the coastal towns in Cyprus.
What do you think, George? You are in this industry yourself, and you are dealing every day with these things. Do you think that we will attract more people from the UK now?
Listen, I mean, the people from the UK predominantly have been acquiring residential, either primary or secondary homes. So, I mean, Brexit has slowed down the demand. I mean, a few years back, especially areas like Paphos, 50 or 60% of all the real estate transactions there were from British nationals, either for, as a permanent residency or a secondary home by the sea. I mean, we have seen a slowdown from British buying in Cyprus. The currency exchange is another issue. Now the sterling is getting slightly stronger, so it's favorable, but there were times that the sterling weren't as strong, so that was another issue. And also all the legislative and issues with mortgaging assets, now they're out of the EU. All these things, I think they will negatively affect the acquisition of British nationals. But I mean, we have seen quite a few sales from them, slower than 2018, 17, 18, 19, to be honest. But I think it will take some time until we digest all the rules and regulations of Brexit. And I think there will be a lot of potential incentives for British nationals to buy in Europe and vice versa shortly after, this COVID and Brexit wave goes through.
And I think just to add to what George is saying, you differentiate between property you want to live in and property that you're investing in. It's something that also is very important. And as concerns the Al Jazeera papers, of course, it was, very bad. But at the end of the day, it's what George was saying. We need time to get used to all the regulations. It was presented in a way perhaps that was quite biased. But at the end of the day, I mean, every country, when it has introducing some schemes, it has a period whereby it needs to work through some things. I mean, for example, the UK had a huge LIBOR scandal, but the banking sector, you know, everyone didn't just get up and leave from the UK. So the investors know, the ones that, for example, we work with, they have both feet on the ground. They are themselves looking for deals. They're not looking for any special treatment. And you know, these are the type of investors that, of course, are great for the country. Like Michalis was saying, loans now are not given without the capital adequacy rules. Things are moving towards that direction, so that will have some effects that will decline a little bit on the opportunities for a great mass of people. But what Cyprus now is trying to do is to increase the quality. And, you know, if it's not available to a whole lot of people, then at least we'll have better quality clients that we can work with towards a circular and sustainable economy for Cyprus, because this really needs to be our next target. And UK does have the business ecosystem, and that's who we think we are good partners with.
Okay, we have to come to an end now, because I think we went half an hour over the time. There are some questions about the funds and the permanent residents, as well the tourists in Cyprus, but we will cover in the next webinar, because anyway we will have the experts on these matters. I would like to thank everybody for being with us today. We definitely will get more questions in the next few days, and I will send it to all of you. As well, I will send all the names and the contact details of our participants, so you can contact them with your presentations or anything you want to talk with them about any other matter. Thank you very much.
Thank you, Savvas.
Thank you, Savvas.
Been a pleasure.
Thank you.
Thank you for inviting
Thank
me.
you. Thank you.
Bye, Xenia. Bye, guys.
Bye, everyone.
Bye.
Take care.
Bye.
Bye-bye.
Bye bye.
It was a pleasure. Bye.
Bye.
Bye.